Come here. Hey guys, happy Friday, crazy week. Dog wants to go for a walk. Katie wants me to film while I'm walking. There's no time for that. I am hyped up on caffeine. Now I'm drinking decaf tea to bring you this weekend update that starts now. Okay guys, this weekend update is going out to everybody because whether you're an agent or a real estate professional, a referral partner, CPA, certified financial planner, or just someone that owns a home, has a mortgage, and is wondering what the heck is going on, this update is for everyone, and it'll be sent to my entire database, both sides, you experts and my clients as well. First thing, let's get a handle on what's happening in the market, why you may be hearing, seeing, reading, or talking about it amongst your friends and family that, man, what's going on with the stock market? And if you've ever worked with me, you understand that typically the relationship between stocks and interest rates is inverse. So if we're having a great day on the stock market, a lot of times some of that money is coming from bonds, which impact interest rates, and a great day on the stock market might mean not so good of a day for interest rates. Now, not a big deal if you already own. We're going to talk about that in a second. But what we're seeing right now is a whipsaw back and forth of the New York Stock Exchange, S&P, and NASDAQ. We're seeing equities go back and forth by 5, 6, 7, 8, 10% on any given day. And we're not seeing those rallies benefit the bond markets. In other words, when we're seeing sell-offs, we're also seeing that happen in bonds. I'm going to send you an article or link the article down below that's telling you why this is happening and why, in my world, the sky's not blue and down is up and up is down. And that's happened a few times in my career before, but nothing like this. You'd have to go back to 1981. I was one to see what's happening now. So don't listen to what everybody's telling you. Read the information down below. Make sure that you're getting a trusted resource for these things and see if you're in the market for a refinance or a purchase, why rates aren't getting better despite what you might be reading on clickbait. More on that later. Read the article down below. See what's happening. It's quite unprecedented. Doesn't happen often, and it's important for you to know. Okay, let's talk about, if you're a homeowner, what you have that is quite different from what you're seeing in your stock portfolio, 401k, or other investments. If you're looking to purchase a home, you're probably trying to get to the place where you have an investment that isn't whipsawing back and forth on a daily basis to the tune of 10% or more. So if you own a home, you've got shelter from the environment, both Mother Nature, as well as the environment that we're in right now, which is trade and geoeconomic battles between not just inflation, but also taxation, tariffs, and what's happening in our bond market. So if you have home, you have shelter from the environment, you have shelter from overpaying your taxes. I always discuss tax benefits with you when you're looking at how to structure your mortgage or even purchase and obtain a mortgage when you get a home. So you've got some shelter, you've got a steadily performing asset. I'll put a link down below to the frankly drama-free home appreciation scenario that we've seen since the Great Recession. I'll link that down below, but if you're talking about steady gains of between 4 and 6%, depending on where you are in the country, you're pretty pleased with that, especially compared to some of the other investments that are deemed traditionally safe. Those trades are actually underperforming right now relative to a home that is increasing between 4 and 6%. So what you do have is a home value that's not whipsawing back and forth like the value of a portfolio. You have shelter from greater tax liability and certainly whatever other storm Mother Nature may throw at us. That's what you have. Okay, what you should have if you don't. A client sent me a picture of basically clickbait the other day. They're looking to maybe extract some equity from their home for some debt consolidation and some home improvements, and sent me a picture of an ad for home equity loans in the 4% range. Now, the web has been around long enough for us to realize as humans, as consumers, as whatever we are today, what clickbait is. And so if you are seeing an ad that says the cost of a home equity line may be less than the cost of money from which a home equity line derives, it's probably clickbait. So good news is if you have a trusted advisor, you can send this information and them say, is this truth or trash? It's not Tuesday, which is when I usually do truth or trash. It's trash, you guys. You're not going to borrow money for less than the cost of money, certainly in perpetuity. So get yourself a trusted advisor. I've been on the phone every minute of this week talking with past clients, current clients, future clients about what's happening in the market, and also kind of debunking some of the clickbait that's out there. But if you want to know what's going on, get with your trusted advisor. It could be your certified financial planner, could be your mortgage planner, could be your agent. Hopefully you've got a good collection of trusted advisors. Get one, stick with that. Let the clickbait be clickbait. Okay, so that's what you do have. What you or should have, or what you don't have is this. Let's say number one, you don't have to worry about what's happening in the stock market day to day as it pertains to likely your biggest asset. And for most of my clients, their home is their biggest asset. If you have a mortgage, you don't have to worry about the interest rate ebbing and flowing day to day as it's been doing quite substantially. Rates are actually up on the week. And as I mentioned in previous videos and linked down below, that the 10-year has risen more in any single week than it has since I was 1 year old. So that volatility is not affecting you because you have a mortgage that's either tied to an average of rates or fixed for the next 30 years. So these things aren't impacting you as greatly as those that are wholly focused on what's happening with the Dow, the NASDAQ, the S&P, and other investments day to day. So you don't have to worry about that. The second thing is you don't have to worry about not having options. If you own a home and you are in need of funds, there are ways to liquidate said funds without selling your home. Additionally, with inventory still at less than 3 months of inventory in the Southern California region, you've got plenty of options should you want to move or relocate and liquidate with some tax benefits if it's your primary residence or an investment property that you want to roll into a different investment property. You don't have to worry that you don't have options, because options are what you have when you've looked at all of them prior to purchasing a home or managing that mortgage with your trusted advisor. So you don't have a lack of options. That's important. And thirdly, what you don't have to do is scour the internet for things like I mentioned in the previous section of this video for solutions that aren't real or dangers that aren't real. So don't get hyped up. Understand that always real estate is the long haul, and by properly managing that mortgage or your purchasing decisions relative to the mortgage, you have options and you don't need to WebMD a solution based out of fear. You should have absolute confidence. And finally, what should you do? So a few key reports did come out this week. Unfortunately, all the turmoil in these trade wars are overshadowing the fact that consumer prices declined at probably their biggest, I don't know for sure, and I should, their biggest rate in some time. So we're seeing consumer prices actually fall. Now, I'll remind you, this is ahead of the tariff implementation, right, as of just this week. So we could see those go on the rise, but all the things that we've looked for as indicators, consumer pricing index, producer pricing, core producer pricing, CPP as it's known, was also down today. We're winning the battle on inflation relative to what created that inflation coming out of the pandemic. Now we're seeing another side of things that may raise costs on average families up to $4,000 or $5,000. Now, the net result of that is that we should be seeing interest rates come down. And once this storm that we're kind of in relative to geoeconomic, political environments and trade wars, we should come out of this with better interest rates. So for those of you that want to know, hey, what's going on with interest rates? Well, lenders don't really know where to plant flags in a days where trades are vacillating so heavily back and forth on an intraday basis. Multiple price changes for the better and worse every day. So what should you do? Create a plan around what your current needs are and your future needs. Most of my calls this week have not been about, what's going on with the market. It's folks that want to take advantage of the opportunities ever present today in the market, whether that's lowering interest rate, finding a better loan solution to meet their needs, something like the all-in-one, raising capital so that they can purchase their first home, like Home Funded, which will supplant a lot of the special purpose credit programs that FHFA just took away. So if you're a first-time home buyer or a first-time home buyer looking for a hand up, not a handout, to purchase their first home, Home Funded is certainly a solution. So you should look into Home Funded if you're looking to purchase a home or you have a client looking to purchase their first home. And lastly, plan for your future needs now, whether that's getting the right mortgage, liquidating some funds, or being considerate of what your needs are in the future as you shop for a home today. Those are some of the things you should do. If there's anything else that you have to ask me, hit me in the DMs, put it in the chat below, or send me an email at stanfieldteam@cmghomeloans.com. Have a great weekend. Be cool. Everything's going to be okay. And if you own a home, you're in a really great position. If you have trusted advisors from realtor to CPA, financial planner, or mortgage advisor, you're in great shape too. If you need any of those, give me a shout. Have a great weekend. Bye.